The S&P hit another record high today. So now what? Do we see more record levels coming? Vance Howard is with us, CEO, Portfolio Manager of Howard Capital Management. Thank you so much for being with us. You thinking we see more and more? I mean, look, we've already seen 12 record closes. Are there more to come? And what drives that?
You know, it's kind of an interesting thing, Nicole. Everybody gets sort of some heartburn about new highs. You know, we're making a new high on the S&P 500, which is incredibly encouraging. There is no more technical indicator better than new highs on an index. For a new high to go from, let's say, it's at 6,350 now on the S&P, for it to go to 12,700, which would be a double on the S&P, which is going to double sooner or later. It's going to make new highs the whole way out. So new highs are the most productive, most stable thing that you can see as an investor. This is what you want to see, is indexes making new highs. Plus, then it gets you a chance to start to take really nice shots at stocks that are beaten up, or stocks that are moving higher, or stocks that are even outpacing the index. Yeah,
understood. I mean, when you think about how there's opportunity, you know, do you feel like there's a lot of opportunity? What will you take away from this earnings season? What are you buying?
Oh, earnings seasons have been very, very good. If you look at earnings, they're beating. What have we had? 12 companies announced. They're beating by what, 7.6% or something. So that's on track for an incredibly strong earnings season. So that's gives us even more of an uplift. But there's so many great opportunities right out here, Nicole. I've said this before. You know, when the market dropped off 28% on the Russell, I kept saying the S&P is going to close above 6,500, and we're getting pretty close to that now. I think the last 2 quarters will be incredibly productive. But I tell you, I think the S&P could double in the next 4 to 6 years.
Really? And is there going to be certain sectors that will be really, you know, because sometimes we'll see records for some things. The Russell, for example, did not participate the way the NASDAQ did. So when you say the S&P, I'm sorry, could what in a few years?
I think the S&P in the next 4 to 6 years, I think that it actually could double it. I think you could see it at 12,000, 12,500 on the S&P 500. I think that you're going to see a tremendous amount of growth coming into the stock market over the next 5 to 10 years. I think this is a great time for investors to be coming into the market and buying stocks and buying the index and watching their wealth grow.
And so what areas will be the part that you're going to park most of your money in, so that you can gain on that?
Chase AI. You got to chase AI. Everybody's going to chase that. That's going to be a game changer for so many different industries. But when you see the offshoot of AI and how it's going to impact different industries, including healthcare, I mean, you can see it really pump up healthcare. And if you know, we were talking about the airlines a little bit. Maybe they could become more efficient with AI. But you look at things like Salesforce, and you know, you look at marketing of different products and materials, and AI is going to be a pretty big factor in that. It's also going to reduce overhead and cost, or it has the potential to. So that's going to increase earnings, drive stock prices higher.
And what about real estate and housing? I mean, it's 2 different stories, right? Housing, how are we selling? We have still a high mortgage rate. Prices are high. You know, does that area get better as far as the economy? And would you say that real estate is an investment, a good investment?
I think real estate is going to be a very good investment. You know, don't get me started on Chairman Powell. I've got some real heartburn there. I still don't understand in 2018 why he was raising rates and it dropped the market so much. He keeps saying he's data dependent, yet he keeps playing politics, because if he was data dependent, we'd already had at least 1 cut this year, maybe 2. And the only thing that's holding real estate back is mortgage rates are too high. They're keeping investors from coming in and buying homes. So if he starts to drop rates one of these days, which we hope he does, you know, you should see real estate start to ramp up.
Understood. I mean, when we think about these names like Nvidia and all the other Mag 7 names and AI as it trickles out from that, I mean, what kind of names do you like?
Well, you got to love Nvidia. You got to love AMD. AMD came out with strong, you know, they look strong on paper. Technically, they're looking pretty good also. Those 2 names we like quite a bit. I always go back to Salesforce, because it's going to be a real benefactor of AI. Once it really corners that market, I think Salesforce is going to be a pretty strong tech stock to own, especially 3 to 5 years out. But there's just going to be a tremendous amount of opportunity. And again, when you get an index like I think is going to go much, much higher, you know, all boats are going to rise in a rising tide.
But you would like to see Chairman Powell cutting rates even next week. I mean, how many cuts are you hoping for?
Well, you know, I thought he would have already cut once, but maybe he'll cut next week, but I doubt it, because, you know, he keeps saying he's data dependent. Well, the data keeps saying cut rates. but the politics says, I don't like Trump, so I'm not going to do it. So, it's a real mess out there. But, and if he doesn't cut rates, when you start to look at our debt load, Nicole, our debt load is unsustainable. We're going to have to start to deal with this debt issue. And by the way, I wrote about it in my Wealth Watch, my little column. I think it was June of last month. This is the first time that we've had a surplus since 2017. So anybody that's kind of upset about tariffs, they're clearly working in our favor. One thing that drives me nuts about the Fed is they keep using this word uncertainty. Well, everything's uncertain. The market's uncertain. It's uncertain where you're going to get up and live today. So if you're data dependent, he should start cutting rates.
12,000 on the S&P 500. I mean, I can't wait to talk more about that later. Tell me about are you watching some of the airline stocks? Have those grabbed your attention today, and why?
Well, when you look at the airline stocks, American Airlines, I would stay away from it. I think they've got way too much debt. They've got $21 billion in debt. Now, one thing that I do find interesting is Southwest Air, the symbol's LUV. And the reason being, Nicole, is they used to just be a big cattle car hauler, man, just plop you in a seat and they don't even throw peanuts at you. But they're starting to change their vision. They're starting to come into a new reality that travelers want comfort. They want comfort and they want convenience. And that's what I think one reason that Delta Airlines is doing so well is they're giving the customer what they want. But I think that Southwest is starting to realize that. They've also got a $2 billion share purchase buyback plan. So I think if you're looking for an airline stock with some, 2 to 4 year potential of pretty decent growth, I think Southwest Air is a good airline to look at.
Vance Howard, CEO, Portfolio Manager, Howard Capital Management. Vance, it's great to see you.